because some people are like, well,
Yeah.
how do you amass, all these units and stuff? But the key thing is, I won't necessarily now recommend that somebody has to follow my path. I would say that's just my journey. However, you can really jump in leaps and bounds if you choose, to actually. The worst thing would be to buy a lot that you thought you could build something on and then you can't. So you definitely need some background information in terms of what you should focus on. And that's where your expert team comes in too. What's great about real estate is you can come into real estate investing bringing in your specialty, whether it's design, whether it's
Yeah.
construction, whether it's the back end business, whether it's, that's what's so great about it. And I think that's why, real estate investing can be so universal. But in terms of like the project management of the construction, it really comes down to.
Joining us today is Mrs. Carleen Sue. Carleen, could you tell our listeners a little bit about yourself, how you got started in real estate, and your journey to this point?
Oh, well, thank you for having me. I think your podcast and, the topics that you cover are really interesting. So I'm happy to be here. So I started in real estate about, gosh, 21 years ago. I was always investment minded, and I had a mom that actually helped me invest in stocks, like starting in university. So the idea of investing was kind of ingrained. And so when I started entering the workforce, I was like, well, what should I do? I wanted to do something more than just do my full-time job. I was like, what else could I do? And I was like, well, it makes sense to invest in real estate. I just had a gut feeling, that, it's a hard asset. It's just nice to even just to have something like that. And that's where my journey started. I bought my first rental. It was an up-down duplex in Calgary. It doubled in 2 years. I realized in those 2 years, the power of real estate. So I just continued doing investing, maybe in different forms too. I've done investing in condo developments through the years that I was raising a family. That allows you to be a bit more passive. But then
Yeah.
after my second child, I was like, you know what, I'm going to get into it again and just start building my portfolio. And now I'm doing it full time. I focus on purpose-built rentals as a strategic way to actually combine the benefits of development, especially in today's market where I think there's a lot of need for new housing with long-term hold, which is what I really believe in terms of the strategy for wealth creation and generational wealth. So yeah, that's basically what I do through my company True Capital.
I love that. It was a nice little summary. So, and you know what I really like, what I really love, in fact, is the fact that it was ingrained in you from a young age.
Hmm.
I truly hope that I can just imprint that on my kids, because I feel like it gives you a good start to your life. But I want to hear a little more. So you started off with the duplex, and then you went into the condo development. How did you progress after that?
You know what? I added single family homes like one or two every year. And that's the thing is you have to start investing in real estate to then realize the equity from each to then put it back in, because some people are like, well,
Yeah.
how do you amass, all these units and stuff? But the key thing is really to get started somehow. And that's the power of real estate. It's using the power of leverage. And then as you get that, the natural as well as some active appreciation, you just build that equity so that you can then roll over and put into another property. So we did that. But then I actually decided, this is what I prefer doing. And I left the corporate world. I was a financial advisor in oil and gas, doing economic models of large projects. And so when I did this full time, I was like, well, where can I actually find even better value for my investors? And so that's when I started looking. At first, suited basements, but I started looking to, zonings. And then I was noticing a bit of a trend where I was like, okay, there's these multiplexes coming up, and I happen to have an architect friend. And so between the two of us, we're like, well, I think it makes sense to do these as an investment. And so since then, I'm now on my like 10th project, really focusing on Edmonton and Calgary, doing these. And now, yeah, developer, investor, coach. So
10th project, so you definitely have a thing or two to chat about there. Tell me, and with regards to these developments, are most of them on the infill side or?
yes, they are in the infill side. Yeah. Generally, what we do, the strategy is we actually look for an existing property on a lot that we think is likely going to be approved for the zoning we need. You can't just pick any lot and just think you're going to, you have to really make sure that everything lines up. You have to know the city area plans and what they have already outlined as being workable for what they have planned. And so, yes, and then we go through the regulatory stuff, which generally takes a number of months, and then we tear the house down and build a brand new plane, like a brand new building. So going from like a 1 unit property to 8, or actually in some cases 12.
It's an exciting process. And I want to dive a little more into this, but I want to go back to what you mentioned is you sort of saw in terms of the Canadian market, and you saw this being like a good strategy to pursue. What's your current take like on the Canadian real estate market? And you don't have to go as broad as Canada entirely. You focus on Calgary and Edmonton, even if it's just within the space that you invest. Like, what's your current take on where the market's at?
Yeah, I really do think the next few years we're going to see a lot of growth. I mean, we have seen that across the country. And, where Alberta is a bit different too is that across the country, we're seeing a lot of people immigrating. And the thing is, they can't necessarily afford to live in these other provinces. So eventually they're going to be leaving those provinces to come into Alberta. Alberta in general has always been considered more affordable, especially compared to the average salary. Calgary actually has one of the most educated populations just because of all the head offices here. And in terms of affordability and just reasonable rates, you get cash flow, you get all the advantages of Alberta. Landlord friendly rules and all that stuff. So I really foresee the next few years to be quite positive.
I agree. And then couple that with like the low inventory aspect, I think the infill is an amazing strategy to be deploying at this time, right? Because like you mentioned, you take in a single unit and you're making 8 or 10 units out of that same land, depending on the
Yeah,
size, of course. So I
right.
can definitely see the value add in that for sure. For people who don't even understand what infill investing is, and why it's become so popular, can you sort of just break down essentially? I mean, you've kind of broken it down, but could you just give like a rough breakdown on that itself?
So I mean, when we say infill, it's usually, sometimes inner city, but that even can be generalized, and it does push sometimes outside of just the inner city core. But I think it really is about the gentrification and urbanized land, just like renewing, existing old communities. And I think that's what's great, is because a lot of people want to continue living in these beautiful neighborhoods with like mature trees and all the amenities, but a lot of times they've been priced out of it. And I think that's also why I've chosen this strategy, is when I build these particular type of buildings, they meet the demand where it's people that don't necessarily want to live in condos anymore, whether inner city or suburban, but they might not be able to afford the duplexes or the single infills. And so I think it really meets that gap in between. And so for my investors, it's nice to know that there is demand for this type of product. And you typically attract a nice tenant profile when you've got these new buildings to actually hold in your portfolio. So
I agree. It's if you compare that to like getting an older apartment building where you're trying to do a value add, the finishings, the feel, like I think the tenant profile in general is a whole lot better on the new build. Now speaking about like revamping an area and gentrification, what's in terms of your strategy? Because I know you more on the long-term buy and hold. What's your take on the different class neighborhoods? Where do you like to develop in? Is it more on the neighborhoods where you're going to get a cheaper lot price and bring those upfront costs down, or where the lot price is a bit higher, but maybe the tenant profile, the appreciation long term is better, the neighborhood itself is better scale? What's your take on that?
I like building in the nicer neighborhoods, because yes, you will pay more upfront for the lot. But I also have seen that the end valuation of that property once built, there's a bigger range there. And so I always like to take a bit of the safer route, in any type of investment deal that I bring to the table, is just where can I de-risk the project? And I always like to look for the investments where I know that there's just a bigger margin.
Yeah, yeah, I get that. Because your rents are going to be higher in a nicer neighborhood. I feel like your tenant turnover is going to probably be lower. And when the point eventually comes where inventory is not as scarce and it's less of a problem, I feel like, your vacancy is also going to be lower in the nicer neighborhoods than in the others, right? So yeah,
Yeah,
I
I
like that.
agree.
It's definitely a longer term strategy, I think, a longer term play. Now, with all strategies, there's pros, there's cons, there's benefits, there's drawbacks. Can you potentially highlight both sides of the coin with regards to the strategy?
Yeah, for sure. Developments as a whole is more riskier than buying a turnkey property. That's, less risky than buying a property that you need to renovate. And so, in terms of that curve, yeah, definitely developments are more. But then at the same time, I look at, what kind of development, how long is that time horizon. So for a development, there are more moving pieces, more variables, more unknowns. So I would say, that's the difference. But then that's why you get compensated when you put together these pieces and you pull this together. That's why the after value of completing something like this, you get something better because you've put in that time, you've taken that risk, and you've done the things that maybe the average person hasn't been able to do, and that's why you get the benefit of the added value, the ROI. So I would say that's one. Again, the other thing is time. It takes time to do a development. This on Compared to other developments, when you're looking at like a condo build or even large high rises, you're not looking at a 5-year horizon. With these ones, it's almost as short and as de-risk as you can get because it's just like the regulatory is about, I would say, depending on what steps you have to do, whether you have to rezone it or not, but anyway, anywhere between 3 to like about 8 months. And so really that's relatively short, and really compared to other parts of Canada as well. And then the build itself is under a year. So that's I would say it's one of the cons, but also it's one of the, in terms of other developments, it's one of the de-risked ones, I suppose.
Fully get that. And it seems like your progression has been like start off on like a smaller value add and then sort of scale up on on the capacity of value that you add into your investments, right? So like suite in a basement, of course, is a smaller scale as this. Now, for people looking to get started, do you recommend that they take that similar path where they start with smaller value adds and then work their way up into something as big as this? Because the more value you add in, the more return generally you'd expect to get on your investment, right?
Yeah, no, that's a good question. Well, that's been my journey, right? Like when I started, it was just like I wasn't part of any network. I had read Rich Dad Poor Dad. I also had followed, Don Campbell, and he was part of the RAIN network. And they subscribe to the single family houses. However, once you start getting more experience and you're like, you also find out what's out there, and you kind of start working with, when you start bumping into kind of like how many properties can you qualify for, and you look, and then I'm like, well, commercial makes sense. And when you offer all your knowledge and your expertise working with other people, well, now, allows you to do other types of deals and these bigger types of deals. I won't necessarily now recommend that somebody has to follow my path. I would say that's just my journey. However, when I tell somebody, like when I talk to somebody new, like there's so much opportunity out there, and you can really jump in leaps and bounds if you choose, to actually partner with somebody or be
Yeah.
coached by somebody, and you can actually jump by quite a few steps. Like I wouldn't really want to say, well, take the 20 years and do all the things that I need so that you can get to, whereas now it's like, I'm offering these opportunities and you can be a part of these 8-unit buildings today. So yeah, I wouldn't necessarily say that. And with multifamily, there's definitely pros about that, like the benefits, which is just nice to have multiple units. You're not relying on the one. There's, yeah, that, and the fact that it's just like a larger building sometimes on one land. I mean, you're really maximizing the value of it. So
100%. Yeah, I fully agree with that. There's the economies of scale, right? And then another factor is leverage in someone else's expertise so that you can take advantage of a strategy that's working in the current market, but partnering up with someone who's done it before so that you drastically reduce your risk and barrier of entry into getting into this strategy. So I couldn't agree more. Now, what are some key factors for you to consider when getting into infill development, even like you going on your 11th, 12th, 13th deal? What are some factors that you look at?
I think, well, first of all, you have to look at, with real estate investing, I really do think it's just how much time do you have and how much money do you have. That's one thing you have to be clear about, because if you actually don't have much time, I wouldn't necessarily say you should go into development. It is quite, you need to watch a lot of things. I mean, it is a project. It's pretty much project management from the start. You have to be really good to coordinating with accountants, lawyers, the bank, and being really organized in order to keep all the documents organized and making sure that you're on top of all of that. And then I guess I would say you need to also be educated or take the time to understand the land zonings and things like that, because you can't just go into there and just, the worst thing would be to buy a lot that you thought you could build something on and then you can't. So you definitely need some background information in terms of what you should focus on. And that's where your expert team comes in too. But it takes time to build that expert team. And also, sometimes you don't know what that expert team is that you have to put together. And I guess that's why I became a coach in doing this particular type of investment, is because it's not I can sit with you for 30 minutes and then all of a sudden the next thing I know you're going to build this. No, I mean, a lot of times you're going to run into real life things and then all of a sudden you get stopped, or even there's mental blocks because there is some mindset things that you end up facing when you hit these roadblocks. So I typically coach people through that, and also how to build that expert team so that you can rely on them for the advice that you need, but then also knowing what the quickest and shortest way to get to the end result is as well. But that's, yeah, there's so many pieces to it that you just need to kind of figure out.
Yeah, yeah, and the coaching sort of helps you put that puzzle together. What I'm thinking is, with regards to people coming in or considering getting into coaching, do they need to get to a specific part of their journey where either they have some capital saved up, or they have some money? Like, where do they need to be to start, or consider like, okay, I'm at a good point to start my coaching journey?
Mm. I think first you really have to want it, like anything, right? Because like I said, there will be things that's going to stop you, and there's going to be things where excuses will be like, well, no, I don't think I'm going to do it. But if you truly see the why, and truly it's not just about building it, it's about actually building a legacy and building that financial freedom. So you have to stay connected to what this is going to get you. It's not really that I just want to have this 8-unit property in my portfolio. Maybe it is, but when you stay connected to what that's actually going to get you out of life, then I think, or in life, I think that helps. So if you are clear about that and you have shown to be an action taker, and I would say yes, past experience real estate investing is, I think, would be recommended, because it is, I wouldn't say it's not possible to go from nothing to that, but because these are larger sums of money, there is more upfront costs that, are more than a single family home. There are a lot of pieces that you actually have to coordinate at the very start just to make sure to get these type of projects off the ground. And so I would say if the investing part, there's experience there, then at least the new part with the developments isn't as daunting. That would be, yeah.
And one other thing that I'm sort of thinking is, either for yourself or for people getting started in this, I know you said it's pretty intensive on like the project management side. Do you find that there's role specializations with regards to the active partner, or do you find that for all of your deals and other people that you know, that there's like one active partner and they handling everything with regards to the deal?
Yeah, like I am an active partner and I do all ends, but that's also because I've got my, I would say, my trusted team too. So I've already worked out who my trusted lawyers are to have the project monitor service, the lenders, the broker. So all pieces, but that's what the active partner has to do, is they have to make sure that everything works together, and you're working with team members that you really trust. So you don't have to be specialized. I mean, this project isn't of a scale where, you need, I don't feel like you absolutely need multiples. Like there definitely are partnerships, and I think it's definitely doable as a partnership. But if that answers your question, I think
It
I
does.
think yeah.
Yeah. Yeah. No, no, it definitely does. And then with regards to this, because like you said, this is time intensive in itself. Are you self-managing once there's tenants in those units? Are you managing the tenants, managing all the active projects as well, and being a mom and a wife and all that good stuff?
Yes. So so even prior to this, I have built up my portfolio of just buy and hold properties and the units. And so one of the earlier decisions I had made was I didn't feel good about letting it go to a third party property manager. I just didn't have the stomach for it. I had heard too many horror stories. They start off good and then they just get overwhelmed. It's not that they don't want to do a good job. So anyway, I've always self-managed. And then as I grew though, I did start operating it more like a commercial business. So then I do have my software. I do have people reporting to me directly. So I have a clear line of sight and I do approve of every single tenant. And it's been kind of like a win-win and a value add for my investors because they know that I'm also the one managing it that actually, but on these as a part owner, I'm very aligned with their goals of just making sure that not only are the units filled, but they're really filled with people that will take care of the home and maintain the home. And so that's why I run it the way that I do. And yeah, I will say it is very busy. I've got a very full life. My family is hugely important to me, and I really do try to be like a hands-on mom in as many aspects as I can. And so, it takes some discipline to keep them up.
I can imagine. Discipline, a ton of systems. But I like the fact that it's in-house because there are benefits to that, right? Like a property management company with all good intentions, they have their own goal and objective, and that's to be a profitable business at the end of the day, right? And you as an investor is you have your own goals and objectives when it comes to your rental property. So bringing that in-house, I think, makes things a little more succinct, makes it a little more profitable, a lot more hands-on. But I think if you have good systems and a team in place to help you, it can definitely make things a whole lot easier.
Yeah, exactly.
Okay.
Those two things are key.
Okay, so can you share? So you've highlighted like some of the downsides, any misconceptions. Can you share like a success story from one of your infill investments?
Yeah, like I mean, I recently was able to refinance one of the properties, and earlier I had promised and I don't like to use the word promise, but when I put together a deal, I do run the numbers quite carefully. I always err on the more conservative side, and I do choose my investors carefully too, in terms of just making sure that whatever we presented meets their goals as well, but then also that this is what they're looking for as well. And so for these particular investors, they were looking to grow their equity, and really not start from the ground up, and not needing to do single family homes but going straight to an eightplex. And part of my strategy was really, let's do this development so that I can then also return most of your capital, and so that you can then deploy it and invest in something else while still holding this property, while we still get the natural appreciation that I expect over the next few years. And I would say, yeah, like that's been, I think everything on that one has been pretty much like clockwork and as planned. And I'm really happy to say that I would say in the next week or two, I'll be able to do exactly that. And now they're able, because that was their goal. They really wanted to be able to then buy another investment with the amount of money once they were invested in this. And it was because I was able to identify this opportunity. There's a lot of benefits to doing this, in the sense that a lot of the ones that I do, they get an appraisal value of a few $100,000 more than what I actually can build them for. And that's not always across the board. That really is my construction team, and seeing starting with a land value that I think was below market, all of that put together. But at the end of the day, if I can create that value, it's almost like getting equity in the buy right away. And so you really then, yeah, you really reduce the risk in any sort of, when you already know that there's that cushion in there, much less the value you're going to see when we actually sell it.
And so when you say sell it, how long do you generally hold on to them for?
My general business plan is to hold them for about 4 to 7 years. I would say, really aiming for the 5, but being flexible just because, it really comes down to, what is the current market condition? Where can we maximize the value? And if, let's just say I'm able to actually return their capital 100%, why not hold it for a bit for longer and just continue bringing the cash flow? So, there's, and that's where, I do work with my investors depending on what all parties want.
That makes sense. Now, you mentioned, getting the value add on, or getting that value, that cushion on the buy, like with regards to getting a lot at a discounted price, and then your construction team that you put in place. How do you recommend people go about putting the team in place? Someone who's starting to build out their team. I know you said this can be quite the challenging side of it all, right? How do
Yeah.
people get started on that?
Well, I think you really just have to, I think sometimes the worst thing is sometimes just to take somebody's referral and then you just go with that. Like, I think what's really important is take the referrals and come up with a short list, but then also having a preset list of pre-qualifying questions to ask so that you then are comparing somebody's services apples to apples. And that's really critical too. Is you can't just take somebody's price per square foot, and because some builders are including certain things while another builder isn't. So you have to know, and that's where the experience comes in, because if you don't know better, you might just take everything at face value. And you're like, okay, well then let's go, and you don't necessarily know that that's already on the high end, or that actually there were some warning signs there that you just weren't able to pick up. So I would say definitely, but that's where you do have to start. And it does help when you have a mentor or you have a coach to kind of help you along the way to just kind of identify. Like when I work with my students, they'd be like, right away, could be like, no, these are no's because of X, X, and X. And then, yeah. And that's how we actually really refine that team quick, and then also get them on the quickest path to getting a project out there.
Makes sense. And that's where coaching ends up paying for itself, right? It's not just the time that it saves you,
In
but the
spades.
dollars in mistakes and all of that, and
Yeah.
partnering up with the wrong people. And yeah, absolutely. So I guess step one would be trying to get some sort of coaching or mentorship so that you can have a little bit of guidance on pre-qualifying your team, right? And then you said you manage the construction side. How do you have any advice for people in terms of managing the construction aspect of this investment?
I think you're going to have to really look at, I mean, there's some people with a lot of construction experience, and I think with real estate, what's great about real estate is you can come into real estate investing bringing in your specialty, whether it's design, whether it's construction, whether it's the back end business, whether it's, that's what's so great about it. And I think that's why, real estate investing can be so universal. But in terms of like the project management of the construction, it really comes down to what your expertise is. So my background has always been more on the evaluation side, more on the business planning side. So I am going to work with a construction team that's actually very experienced, or I have the lead person who's very experienced. And so therefore, they're not looking for me to tell them what the next step is to do. However, that being said, I have my own spreadsheets in terms of what are the next steps, what are the pieces, what are the budget items that I'm really watching for and tracking. And those are all the things that I think help when we talk about systems. And then just every time you do another project, you just refine that more and more so that you do, you build a pretty robust system every time.
That makes sense. And
Mm-hmm.
like you say, refining it. And speaking of refining it, how do you, and I'm sure this is something you've refined, is balancing the profitability with the sustainability side, because you are holding it for a few years, right?
Mm-hmm.
And there is that fine line between the two. I'm sure you've sort of refined this over time, but any advice for people on that?
Well, I think for me, I mean, the quality is super important. So, whether my business model was to just build it and sell, I think I would still do it the same way. But your building envelope has to be like, the integrity of that has to be number one, because it's what holds everything up. And you can make things all pretty with finishings and stuff like that. But if you skipped a step, like eventually that comes down to bite you. And especially when my business model is bring on investors and we hold it together, like I have even more responsibility to make sure that this is a well-built property that's meant to withstand time. So I will put in the extra expense, and it's not even a huge expense to put, real waterproofing wrap. I mean, there's some that are just more not waterproof but water resistant, but those are all the things, and taking the time to make sure, but that the foundation is poured at the right time with the right curing period. All of those things are super important.
And then when it comes to the finisher side, do you find that it's pretty cut and paste for you at this point? You've like narrowed down what works for you, what you like, or do you find that you're still adjusting it based on the neighborhood and that sort of standard that you need to renovate to? What does that look like?
I do a bit of both. So definitely, you get some economies of scale that, like, once that you've got a model that works really well, I try not to change that too much. I do still enjoy like the design side of it. So, I still choose certain things, like say whether it's the kitchen backsplash, to give it a slightly different look than the previous project, but really, I would say about like 85% would be the same. I do try to make the exteriors have slightly different looks as well, but generally like the floor plan, the interior specs, I keep them the same.
Makes sense. Yeah, that makes a lot of sense. So far, it's been a very well-rounded, very informative conversation. The one aspect that I think I want to touch on a little more is the financing strategies about it all. Now, I know you said like, you consider holding a property a little longer if you're able to get your investors fully paid out, then why not take advantage of the cash flow? What does like your typical financing strategy look like, and how can you sort of adjust it for your investors' goals?
Well, with these ones, you would get commercial financing for these. And so you do need to get construction financing. And they actually work really well for the new MLA Select CMHC program as well. So that's what makes this even more attractive as an investment. So not only do you add like 8 to 12 units when there was once one, but you're now able to get like a 95% loan to value in most cases. So it's a very attractive product for that reason, but you do have to know how to kind of meet the CMHC MLS like guidelines. You do have to, they are pretty rigid, like they have very, clear specs about, needing to use like a project monitoring service and just providing all of those reports that they need to get it financed, whether you needed it for regulatory or not, but like an environmental, and you do need to get all of those reports. But I would say overall, the financing strategy is to really get your best loan to value, assuming that you're still keeping your debt service ratio at what it needs to be for these banks to approve. And then down the road, if we do sell it, we'll be able to release the value that was created. And then you will be able to refinance too. I mean, there's ways to do that. If you have a CMHC, you can get a CMHC second mortgage as well. And so that would be kind of a refinancing strategy at, a few years down the road.
Okay, so those would be like the two major options that you'd go for. Either just refinancing, pulling that capital out, paying the investors, and then holding it a little longer, or just selling it, getting your capital back, and reinvesting it elsewhere.
Yes.
Okay, no,
Mm-hmm.
that makes a lot of sense. Now, what are you, with regards to the lots that you find in? Are you trying to find lots where there's potential to still keep a tenant in while you wait, especially with all the potential delays that they can be in getting the project started, or is that a factor that you're not even really considering?
No, I do. I do like to buy the properties that I can still rent to tenants while I do like get through the regulatory process. It's just a way. It just makes sense to collect some revenue to cover some of the development costs. And sometimes you don't know if it's going to drag on a little bit longer than expected. So yeah, that's definitely. I don't typically buy raw land.
Yeah, or something that's in such terrible condition that you can't really rent it out, essentially, right?
I have done that before, and you know what? Honestly, because it's such a relatively short timeline for the regulatory, it's not a big deal either, not a huge deal either way. And I bought somewhere then, and I would have to say, that's something that you should be aware of, because my properties that I bought, that I renovated or bought turnkey for the buy and hold strategy, they're very different. They have very different
Yeah,
tenant profiles than these development properties. Because why would I buy something so nice so only to tear it down? So yes, you have to be
exactly.
aware you're going to deal with different tenant profiles. You're going to deal with rougher tenants. I have had some messier situations that I've had to deal with. That's part of the game.
Part of the game of being the active partner, right? Okay, now the strategy in terms of scalability, what does that look like for investors looking to pursue this as an active strategy?
It's definitely scalable. You have to, it's one thing I didn't touch on, when you asked before, it's like, what should you be aware of? You may, a lot of these commercial buildings, they qualify on their own. So they have to, it has to have an assumed profit, like net operating income, in order to be able to qualify for the loan that you can get approval for. However, you also have to know that you need to actually also guarantee it. And so, that actually means having enough, I guess, net worth to be able to carry these. And usually that's a quarter value of the building value. And, in that sense, at some point you might actually hit a limit as well for scaling. But overall, I would say it is scalable. It's like once you have a system and you know how to turn it around, it definitely is just as doable as single family houses, and more so actually. You're not actually as bound by the five that is allowed by the government right now, right?
Yeah, yeah. And how what do you find in terms of the management process? How many are you able to manage at a time, or even how many you find investors are able to manage at a time? Is it like get one infill and then sort of just have them kind of slightly overlap, or are you running like two simultaneously?
Yeah, I definitely do have, like right now I'm starting on three simultaneously. It just so happened to. I mean, sometimes you can't really plan it. Like, I mean, there was one where I did have more difficulty because I had a neighborhood who wasn't quite ready to accept the gentrification of their neighborhood. It's coming no matter what,
Yeah,
but like they
yeah.
they were quite resistant. Anyway, that one did affect the timing, and so. But then I also had these other two which were also ready to go. So I mean, you can definitely run them. I will tell you, it's not totally easy. Like I mean, some I think I'm pretty good about managing my time, but I would say sometimes I feel like, oh, my list just isn't done, today, and then it just carries on to next. But it's doable. I guess it depends on your own ability to oversee things and to delegate and to follow up. Like you have to be good at those things, I think.
Speaking of which, like I think we've touched on quite a bit on the infill side. I'm really interested to hear any tips that you may have for like just a full-on work-life balance, because it's evident that you have a lot going on and you definitely managing it efficiently to be able to get to this point, right? What tips do you have that you implement that you find make it easier, I think?
Well, and just to say, I mean, I do think I'm pretty successful at it, but I wouldn't say that it's all without any bumps along the road, right? I mean, there have been tiers when there are just certain days that are just, maybe a bit more stressful, and you have the kids and whatever. So, I definitely don't want to give the impression that it's like all all smooth sailing, because it really isn't. All investors know that you do have those. But some key things, and I've mentioned it too before, is this, waking up and starting my day around 5:30 has been a key change, like a game changer, because you get a lot done in those quiet hours before the household wakes up. And for me, it's like my son, my youngest is up at 7, and then I, after my drop off, like that gap between 7 and 9:30, I'm like, didn't do anything. But if I get like some key things done right before, I already feel like I've kind of won the day. I've already got a few things off the list. I would do that. I would also say trying to keep my family on a bit of a routine on certain things and certain expectations about, their gaming. Because, as any parent knows, like, that these games and these phones, they can be very addicting. And I think sometimes, as parents, we don't necessarily want to be the bad guy, and you don't want to like have that conflict with them. But actually what I'm realizing is you just really need to set those boundaries so that they know they need to respect that. And then when I can control their sleep and their eating, the whole household runs a bit better. And so that's where I was also going to say, trying to eat healthy enough, having some home cooked meals along with, the takeouts and stuff like that really help balance all of the, like, the kids' activities and all of that too. And also just making sure you make space for family time. Like I do try to say, okay, we have one day of the week where it's a family meal. Well, two, one during the week on the weekends, it's Sundays, that's a family day. And sometimes I get pushed back. My oldest son's like, well, we're not doing anything to. I'm like, well, it's not necessary. It's we're in the house, so at least you're like, so if we're not actually doing activity together, well, then we're taking care of our surrounding, which is our property. Like, do we need to like, clean up our room, things like that, which I think serve to kind of keep everybody grounded too. And
I like that. Yeah, that's great advice though, because it's especially when you have a family, it's not just trying to keep yourself into a routine, but it's trying to keep the whole household into somewhat of a routine, right? So I fully fully get that. If you're waking up at 5:30, what time are you going to bed?
I am going to bed earlier than most people. Like, I think I would say for sure before 10:30. Like, once I start waking up or going to bed at 11:30, well, those are the days I wake up closer to like 6:30. But yeah, my body is just used to it now. So it's just like,
Yeah.
I actually look forward to the wind down around after I get the kids down to bed around 9:30. I look forward to that quiet time, and you do just get used to it because it's just that mindset of just kind of giving your body the rest it needs.
Oh yeah. Yeah. No, I fully get that. It's time for like my favorite part of the show, and I mean it's been fun up until this point, but I'm keen to see what your answers are going to be. So it's called time capsule. So let's imagine that you've stumbled across a time machine that allows you to travel back and forth in time. Now you can't change anything, but you can give and receive advice from your younger or older self. So first, let's go back to when you were 18 years old. What advice would you give your younger self with the knowledge you now have? Now this can be familial, it can be investing in a business, combination of everything, general, it really doesn't matter. What advice would you give 18-year-old Carleen?
I would say just trust yourself more, believe in yourself more, and just take action earlier. Like, I came from kind of an Asian background. It's a lot about, respecting authority and then all of that stuff. And it took a while for me to kind of come on my own. And really, the entrepreneurial journey has really been a huge growth journey for me. And so I would say, looking back, and I think I would have loved to be more trusting of myself and just believing in myself earlier on. And another key thing, and this is how what I'm really pressing for my kids to understand too, is it's that financial literacy. But then it really is, I think it doesn't matter. I think you should do what you love to do, but always have a bit of a business as well. So, you can work for a company, do what you love, and that's fine to be employed. And I mean, there's a lot of benefits to that too. But if you have your own thing on the side, I think that you learn so much more. It does push you to be quite proactive, and it gives you options at the end of the day. Real estate, at the end of the day, it's not about the real estate, it's not about the units, it's about the option it gives you to live your life. So if I had a job that I didn't like, or I just really want to take care of my family members when they need it, or just knowing that I can also maybe sell off a property or two when my kids, are going for secondary education, like whatever, like I think it just gives you that opportunity to feel like, okay, I can handle it. So, yeah.
I agree. It's getting to the point where you're not just trading time for money, right? So that you have the freedom, you have the options, no matter what you do. And if you don't have a business, and investing is a business in itself, if you don't have a business where you can leverage systems, leverage other people as well, you always trading time for money. So you don't have that freedom, you don't have that option. So I agree. That's solid advice, because it's you want them to follow what they're passionate about, but in a way that still allows them to have that freedom long term. So yeah, I knew that was going to be an awesome answer. Now I'm looking forward to see sort of what the inverse looks like. So let's look ahead to like your 80th birthday. What advice do you imagine your future self would give your present self at your current age?
Oh gosh, I don't know. I guess I think it'll be just like maybe don't worry as much, and to really and to really just live in the present. And I already try to do that. I mean, people around me know I really just, I do plan for the future. Like my personal motto and my company motto for True Capital Real Estate is like, you plan for the future, but you live for today. And I'm big about that because it really is. I mean, these moments will be will be gone, and it might look a lot like today in the future, or it might be something different. I know for sure with my kids, I really love each and every one of these stages that I've had with them. I mean, these teenage years, I will say, are proving to be a bit challenging, but still, like, I know I'm going to look back and I'm going to miss these as well. So, yeah, for sure, I think it'll be like something like, just enjoy the life.
I couldn't agree more. And I find that, and I'm sure if you were to open up and share your screen with your calendar, people would see that you are pretty well organized given all that you do. And I find by blocking off that specific time, it allows me to be present in doing what I need to be doing and focusing on what I need to be focusing on, and putting that time aside for family time where I'm actively saying, this is for my family, putting all
Hmm.
devices aside, I'm being present in the moment, because you're absolutely right. Those stages go by so quickly without you even realizing it. And you look back at old videos and old pictures and you're like, wow, look at how far we've come and how quickly things have gone by. So I
Yeah.
couldn't agree more. Now, Carleen, I'm sure people that have listened to this point are like, you know what? I'm interested in either following along with Carleen's journey, either reaching out to her to see if this mentorship is a good fit for me, the coaching is a good fit for me, or maybe wanting to partner up with you. Where's the best places for people to find you?
I guess my website is True Capital Real Estate, and that's TRU without an E, so truecapitalrealestate.com. I'm on Instagram. My handle is Investor Carleen. That may or may not take you to the Facebook page or whatever, but yeah, I would say those two places are maybe the best place to get a hold of me. And then I can. It's always better to be like get on a chat, so then to better understand what they're looking for.
Perfect. Well, what I will do is I'll leave all of your links in the description below, so it's just easier for people to click through and find you. But Carleen, I want to thank you so much for coming on and sharing today. This has been amazing. It's been insightful. Yeah, I've learned a lot myself, so I'm sure that my listeners have found value in this episode. I really want to thank you for taking the time.
Yeah, you're welcome. I hope so. I mean, it's just been such a fun journey, and I think everybody, like, you can, nothing is preset. Like, it can be what you want it to be, or you don't, or where it takes you to. So hopefully it's been inspiring, or at least you've learned something. So
Oh, absolutely. 100%. 100%. I'm definitely looking forward to having you on again sometime. So feel free to stop by
thanks.
whenever.
Sounds good. Look forward to it.
Thank you for tuning in to Wealth Through Real Estate. If you're interested in learning more about the rent to own lease option strategy, then you absolutely want to check out the episode with Nicholas and Olivia. This is your host, Alray Noble, signing off.